This is Cece. Welcome to the Orbit. It is Monday, January 22nd. As we do every Monday to start the week, we'll do Income from Options Weekly, where we look at the setup for expected moves in the ETFs and indices. And for those that look to trade that move, sell credit spreads on those moves, or using those moves to trade it intraday, especially zero DTE. So we're looking at the SPY is trying to build, the market is trying to build on last week's positive week. You can see that positive week on that chart. We're looking at a 1 week in SPY. We are up 0.3% going into the open, and that is against an expected move of 0.5%, which is what we've pretty consistently been seeing in zero DTE expected moves, about a 0.5%. Going to the weekly expected move, we've got about 1% in SPY. You can see that those levels, 487, 488, and then 477 on the downside. Going back to the zero DTE, we've got about 485 to the upside. We're about $1 short of that, and 480 to the downside. So that's easy to remember for today. And of course, we are starting in the green. This 1% expected move in SPY, that is quite low, but something that we've been pretty consistently seeing for going on a month, 2 months. And for a 5-day week, a 1% expected move is about as low as we see it. Occasionally we'll see an expected move just below 1%, and those tend to be those 4-day holiday weeks. A lot of times what you see on a tight expected move, especially when you're selling credit spreads, a lot of times it doesn't take much of a rally to creep through a 1% expected move. And of course, a reversal and a move lower can take out a 1% expected move. So be very cautious with the tightness of those credit spreads. As we always look at, don't be afraid to kind of go a little bit outside that expected move. The frequency of which a move will go outside the expected move at low IV is more than it will happen when IV is quite high. However, what tends to happen is those moves outside the expected move when IV is low are not massive moves, tend not to be massive moves. Moving to the Qs, we've got about a 0.7% expected move. We're almost up a 0.5% pre-market. You can see where that's lining up right now. We're looking at about a 423 open. The expected move for the entire day was about 424 to the upside. And then we've got about 418 to the downside. The weekly in Qs is about 1.5%, which is obviously higher than SPY. I'm only seeing this because we are now entering in earnings season, and we've got a couple of big cap tech stocks reporting this week, mega caps, with Netflix and Tesla. There's a bunch of other names reporting, and we've got airlines. We've got this is really the first jam-packed calendar week of earnings. So you're going to see that in specific ETFs like the Qs. You're going to see that in IWM. We've got about a 2% expected move for the week in IWM. And those levels are about 188, 196, 197 to the upside. IWM is already 194 going in pre-market going into the trading day. Again, keep an eye on that 200 level. Does IWM, the other ETFs have gone and are making runs at new highs now. IWM had pulled back from that run it made over 200. It will be interesting to see if IWM tries to play a little catch up here. Obviously, it needs to have good earnings in a lot of these small cap companies for that to happen, or at least good reactions to earnings. But IWM, keep an eye on that, playing catch up, trying to take another run at that 200 level. And then what happens at that 200 level will be very interesting and gives us some sort of sense of the depth of this potential rally to new highs in the Qs and the SPY.